I mentioned Palantir is an easy money sell put this week, and as you can see, I made over $100 on a small position. This was recommended by OptionsFi, but I placed this trade because there's many reasons Palantir is a good value right now that I want to get into. Welcome back to the channel. I'm Henry, former financial analyst, hedge fund worker, and now I just teach here on YouTube. Hitting the like button on this video is really appreciated, and the Discord community is your choice if you'd like to work with me and want mentorship and coaching by me. There's a link for that in the description if you're interested in booking a free call to learn more. Palantir peaked around $40 per share, and now it's about a 75% discount from its peak price. Not bad. In the last quarter though, Palantir grew revenue by 31% on the backs of 124% net dollar retention. A typical criticism against the company has been its reliance on government revenues. Government revenue growth actually deaccelerated though to only 16% in the past quarter. On the conference call, management indicated that growth of government revenues should accelerate in the second half of the year. It was commercial revenue growth of 54% that helped offset the slowdown. So I want to answer, is this stock a buy or is it a sell? What does the current valuation say about investor sentiment? And at what price would I enter and exit the stock? The average analyst has Palantir at $10.81 per share. The moving average is also around the $11 mark for the past 50 days. That means entering into Palantir right now under both of those targets and the moving average is going to be a decent buy based on mean reversion. Mean reversion is when a stock, or really anything, goes back to about average of what it is normally. I can't ignore the negatives in the market. However, we all know what's going on in the market right now. Rampant inflation, a war in Eastern Europe, the risk of humanitarian and food disaster, a repeat of the ARK ETF bubble deflation similar to NASDAQ Composite Index deflation during the dot-com crisis, and much more in the market going on. Despite the bear rally, I think Palantir will fare better in a further rally or a decline. That's because software stocks have been crushed significantly from their 2021 highs. However, I believe their valuations have been reset. As a result, the application software industry seems undervalued now. Previous high-growth SaaS plays such as Palantir, Zoom, DocuSign, and others have sold off double what the NASDAQ has sold off. Software, or SaaS, which is software as a service, stocks have been destroyed over the past 6 to 7 months from their November highs. However, given their massive growth premium in November, driven by the Federal Reserve's liquidity binge, their crash is really not all that surprising. But growth is coming back in 2023, and getting in position early is how you really make the big money. Only stock-based compensation is a concern I have, but it's not all that bad. Stock-based compensation is common practice for technology companies like Palantir, and there's often a surge of it when the companies first go public. Palantir has given employees more than $700 million in stock over the past year alone. It's essential to understand why. And that's because it motivates employees. That's a simple bottom line. Giving employees stock gives them the same motive and incentive, which is growing shareholder value. So it's a win-win for everyone. Although stock-based compensation dilutes other investors like ourselves, it's actually a net positive in the long run as Palantir grows top line much faster than the dilution effect they're having of issuing more shares. Here's the most important reason why I'm not really worried. Stock-based compensation per quarter is steadily trending lower. Alex Karp, the CEO, isn't really dumb. He wants the best for himself and for the shareholders. He doesn't want to destroy his net worth, and he wants to increase Palantir's long-term value, not necessarily their short-term value. That's why I added 2,500 shares of Palantir to my portfolio, or at least I'm going to keep selling put options until I get put that amount of shares. Let me give you more reasons why I'm buying. The company is internationalizing its government business and expanding its commercial sector by conquering well-known corporate customers from cybersecurity to automotive applications. And that's because of Palantir's reputation. Palantir's reputation is so good, they're able to keep getting new clients. Reputation, leverage on a large product portfolio, ability to internationalize its business, and conquering new target markets are the key of the future success for Palantir and the stock. That's actually why they compensate their employees with stock options. Anyone in a revenue generating role in sales, marketing, or management should be compensated that way, so they have incentive to work very hard. Palantir has built a strong reputation in the AI AI market by working with the government sector, and more recently by expanding its business to the commercial sector. Revenues have grown 37% compounded annual growth rate between 2018 and 2021, with improved gross profit percentages at 78% on revenues in 2021. Reputation is a competitive advantage. This is exactly what I'm seeing in Palantir that I believe other people on Wall Street are not seeing. Wall Street is notoriously very short-sighted. They just look at quarter by quarter results. They want to make sure that earnings are going up, that revenue is skyrocketing. They want to mostly make sure that companies are profitable. However, Palantir isn't profitable, and that's going to be a big issue for Wall Street. I don't think it should be a big issue for an investor looking to hold this stock long term. In fact, some of the biggest opportunities are in stocks that are not yet profitable, but will be immensely profitable in the future. And that's because Wall Street doesn't realize this yet. They just see a company that's struggling. They see a company that's not having the best of results in their profits, and the revenue doesn't really matter to them as much as those other things, because those companies need to meet deadlines, they need to meet performance quotas, and those guys working on Wall Street are looking to make their bonuses on a quarterly basis. Or maybe they're a hedge fund looking to make their fees on a quarterly basis. But for me, reputation is an absolute competitive advantage for holding Palantir stock for the long term. The reputation of a company is what drives the company to have immensely better results than their competition, to win more business, and just to have good results over the next 5, 10, 15 years. That's exactly how Amazon built their business, right? Through customer service. That's also why I show you my portfolio and happily answer personal questions in my Discord community. It's because I know there's a lot of people selling option trading courses or signals, but to be the best, I need to show all proof and transparency to actually prove that I'm very good at this. That's why I'm not scared to put myself on YouTube and the internet, because I'm very confident in what I've helped others achieve. For Palantir, I'm not all in on the stock, but I really like selling puts on the stock right now. I think getting in around $8.50 per share will be a good long-term opportunity where you can make double-digit compounded returns on your money. I think it's a no-brainer as a position in the portfolio. Watch this video on selling put options to know my best practices on selling strikes and delta.